Hey guys, it's Crossroads here. I wanted to give you an update on HIMS. I know I've made a couple of videos recently, but there was big news that came out of the White House that has massive ramifications for the company. So let's take a look at that announcement. And hopefully you can see this. This is from Truth Social originally. White House retweeted it. And basically, Donald Trump said right here, I'm pleased to announce tomorrow morning in the White House, 9 a.m., I will be signing one of the most consequential executive orders in our country's history. Prescription drug and pharmaceutical prices will be reduced almost immediately by 30% to 80%. They will rise throughout the world in order to equalize and, for the first time in many years, bring fairness to America. A lot more there as well, but we don't have a lot of details. So, what I'm about to say, it can radically shift between now and 9 a.m. Eastern time simply because we don't know exactly how this is going to be carried about. Is this a goal? Is this a reality? Does immediate really mean immediate? What kind of drugs? Is this generic? So forth. There's a lot of questions. So I'm going to go under a certain set of assumptions, and those might actually be wrong. But short term, the way I see this is HIMS. This is bearish for the company, and it probably will have an impact on the stock. That you can never predict that thing. It can well go up on the news too. But I think long term, it's going to be neutral. And I want us to look at a couple of reasons why. So as far as the bearish side of it, there's going to be two ways that HIMS is going to be impacted almost immediately. If this is really immediate somehow that the price is all lower, imagine their revenue. I mean, we can not just imagine, we can take a look right here, but you can see how the revenue is just climbing, skyrocketing. Of course, next quarter, they're expected to have their first quarter-over-quarter decline just because of GLP-1 revenue from the shortage list going up and drying up. But if immediate really means immediate, all of a sudden, some of the drugs, not all the drugs, but some of the drugs will be selling at a much lower price for HIMS. Let's say it's maybe 30% cheaper. Guess what happens to the revenue on those products? Not all, but again, those products specifically, suddenly they make about 30% less revenue. Now, there are some factors that I think will alleviate that somewhat. It's not a one for one exactly, but it's very easy to see that revenue, at least at the very least, will be impacted. The other area that I think is going to be pretty greatly impacted as well is margins. Now, this is one of the strengths of HIMS. You can see the gross operating margin right there at 73.4%. Net margin is 8.44%. And how they have basically remained about the same. It did dip here under GLP-1 weight with that mix shift. However, that's expected to continue to increase, and that they're guiding long-term over 5 years for gross margins at least at 70. So this might make it a little bit difficult to fulfill that simply because all of a sudden, yes, if HIMS was the only one in the space, this would be great. All of a sudden, things would be quite a bit cheaper, and that would be amazing. But the reality is, with competition in the space, competition is going to lower their prices. And we've seen HIMS be pretty aggressive and protective as far as it comes to prices. They're not trying to get the rock bottom price necessarily, but they want very competitive prices across almost all, if not all, of their products. And so this will certainly impact that revenue, but also margins as well. Even though they're saving some money, simply because they have very, very high margins, that's going to come under a bit of a drag, at least over the short term. I think long term, it might moderate a little bit, but there will still be a little bit of a drag there. Certainly there will to revenue. But as far as long term, how is that different than the next few quarters for HIMS? Well, long term, what's going to happen is there's a lot of competition out there for HIMS that is a lot weaker. They're weaker because they're not profitable. They're weaker because they're burning money. They're weaker because they have massive debt. They're weaker because they don't have that vertical leverage or anything like HIMS does. And perhaps they're also weaker simply because of their margins. In fact, for the many in the business, especially with generic drugs, margins are already razor thin. And so if they and others as well lower their prices, lowering their revenue, also impacting their margins, some of them are not going to be able to survive. And so a lot of the lower grade competition that's out there, that's just lighting money on fire and hoping that it'll pay off one day, they're going to find themselves without a business, barring some shift in this policy that we see at 8 a.m. tomorrow. Regardless, that's going to be an impact over the long term. It will take a little while. Businesses don't tend to go bankrupt overnight on news like this. It can take multiple years. Now, the other part of this that I think is actually bullish for HIMS, although in net it's still short-term bearish and long-term neutral, is the fact that if this impacts generic drugs, and we'll see, but it seems like it's maybe an all drugs type of thing, then all of a sudden we probably have a lot more generic acceptance, a lot more people willing to try and dip their toe into the telehealth industry just because it becomes a lot more commonplace. It's a lot cheaper and more accessible for a lot of people. And HIMS is really good at marketing. It's really good at distribution. It's going to capture some of that acceleration. I have no idea exactly what percentage of additional growth that they'll have, but I expect that they'll actually have more users, not fewer, just at lower revenue and lower margins. So again, short-term bearish over the short term, but over the long term, that builds into a meaningful thing. Why? HIMS has an interesting ecosystem going on. It's basically a flywheel. You can see that they have a lot of different products here. They're helping, they have the ability to help rather over 100 million consumers, and that TAM is growing pretty rapidly. They say as much as 90% of applicable population has yet to seek treatment. I think that begins to change. You can see new products that are coming, a lot of the existing products. And what's really interesting is that they have a flywheel. So again, if they have more user growth, even if it comes at a lower revenue and lower margin cost over the short term, which again is not good, long term, that has implications that are positive for HIMS. And here is that flywheel. They say our value proposition strengthens with each new subscriber. So more subscribers on the platform brings more data, and they are doubling down on that. You see their two most recent hires, they're focused on the data. This is a data play, not simply a typical telehealth play as well. And so more subscribers, more data-driven solutions, personalized solutions emerge over time. And that really is the moat and bread and butter of HIMS, is this level of personalization. This accelerates that, which brings higher quality outcomes, which in turn brings more subscribers on the platform. Now, is that instantaneous, just like the impact from the pricing? No, it's not. That's why long-term, I think this is neutral. Although on the short term, over the next few quarters, it's certainly a headwind, maybe for some time. We'll have to see what those details look like on Monday. Now, one bonus piece that I think is also interesting is we've already talked about short-term, it's bearish. Long-term, it's more neutral. It is bearish for a lot of the competition, though, that's not as healthy. What happens is that competition comes under headwinds, perhaps in the private equity market or in the public market. All of a sudden, they find themselves trading at a much lower valuation. Margins are just not there. They're not able to do what they initially planned. And so as a result, they may be open and prone to a buyout. Which company just raised a lot, and I mean a lot of capital? Well, that would be HIMS and HERS. The initial offering was actually doubled, and there's an option as well over the next 2 weeks to expand that by, I believe, another 130 million, bringing that amount of cash up to $1 billion for the company. Again, this is a company that is debt-free, that is growing, that is profitable. And this gives them all kinds of options on this market. If there's a lot of competition that is selling off and selling at pennies for the dollar, HIMS is very good at acquiring very efficiently other companies and integrating them in the ecosystem. So this likely also accelerates their ecosystem growth too, even if short term it certainly is bearish, or at least it seems that way to me. Let me know what you think in the comments. Do you actually see this as short-term bullish? I'm seeing a lot of my fellow HIMS shareholders think so. Do you see some bear case arguments that perhaps I missed or overstated? I'd love to hear that in the comments. This is a fascinating company. And in these times, these are certainly not boring to be investing in, especially in a stock like HIMS. Anyway, I want to thank you guys for watching, commenting, and subscribing. And until next time, happy investing.